Mr. Chairman, thank you so much for joining us. The FOMC is meeting even today and tomorrow. I think one of the things all of us want to know, and I know we'd value your view on, how deep and how long is this economic crisis that we find ourselves in? What do you project?
Well, I think it's going to be longer than we suspect, largely because the defining characteristic of the next century will be an inexorable aging of the population. More than 18% of the population of the industrialized countries of the world are age 65 and older, and until the last century, the vast proportion of the population worked until they died. Retirement was a rare outcome. As a consequence of this, U.S. retirement benefits, especially Social Security and health care, have escalated significantly and are projected to expand materially further in the decades ahead. And that is an issue which I can explain in some considerable detail for you as to what I think is going to happen. But I think it's going to be a dominant force in slowing down the rate of growth. And it's unclear at this stage whether we are going to be looking at the type of pattern that Sweden looked at for a number of years and cured, or we're going to be in trouble.
But, Mr. Chairman, what is the solution to that, or the answer to that? Because if anything, this pandemic, I think, will push countries, the United States and other countries, perhaps in the direction of greater social support, of greater social benefit programs, because so many people are being hurt so badly.
I absolutely agree with that. I think that the bottom line is that retirement benefits and essentially Social Security, Medicare, and the like are going to be major forces in the years ahead and in government programs.
At the same time, as the Federal Reserve meets today, should they be more concerned about deflation at this point than inflation? We've had, as you know, oil futures contracts actually trade well into the negative numbers. Commodities are weak around the world, and the go-forward inflation numbers are quite disturbing. Is there a real risk of deflation right now in the United States and globally?
Yeah, let me just say, I'll answer it generically, but since I've left office, I've been very scrupulous in not commenting specifically on what my successors were doing. But as a general question, there's no doubt that the problems involved with the difficulties of recent weeks are having a profound effect. And you can judge them as well as anybody.
Glenn Hubbard, whom you know, the economist now at Columbia, has warned about demand destruction and the possibility of what he calls a doom loop. Do we face even the prospect of possible depression, not just recession?
That's a little bit, that presumes that we don't take the type of actions that Sweden did and resolve the problems which are very similar to those in which we have been confronted with. And what that would fundamentally entail is solving the whole question of how you go from a socialist society, which Sweden was, and it finally collapsed in the late 1990s and made major revisions of the type that were we to make would make our Social Security, Medicare, and other problems get resolved. But we are nowhere near that as yet. And it gets to a lot of issues which I'm not sure we want to get into. But the problems are out there, and I hope we come to grips with them sooner rather than later.
But I wonder, Dr. Greenspan, whether we haven't taken a step, and maybe it was the right step, but a step in the direction of what you call socialized economy, starting with the 2008, 2009, but certainly now, with the extent to which the federal government, through fiscal means, is really intervening into the economy very regularly. And for that matter, the central banks, not just the Federal Reserve, but others, have grown their balance sheet to an increasing degree. Investment decisions even depend as much on what we think the government's going to do as on what we think the economy is doing or the consumer.
Well, I would say, the investment process of all of the companies with whom I dealt could not get around the fact that what the government is doing is having a very significant impact on the financial world. And the financial world is where the bottom line is profits and what you're working at. So I fully concur with what you're saying, and we are moving in directions which are quite surprising, and obviously the virus issue coming up has made us a very much more difficult problem to deal with. But how we come out of this thing is going to depend very much on fundamental issues with respect to government. And it seems ironic that I'm saying we ought to be looking at Sweden, which used to be the quintessential socialist society, as the measure which we ought to direct ourselves at to get our system in more balance. And I speak to a lot of people. Very few people listen.
Well, so we're listening, and we want to hear what you have to suggest, because any crisis, from what I've read in history, can give opportunities as well as real perils. If we were to, forgive the expression, use this crisis to move the economy, move the government in the direction you think would be more constructive, how would we do that?
Well, I think the first thing is to recognize that what the data remarkably show is that for the last 50 years, social benefits have been crowding out gross domestic savings in the United States, dollar for dollar. And that has meant effectively that if gross domestic savings is being reduced, that's being the major source of gross domestic investment, then we are dealing with a situation where productivity growth slows down, which is precisely what has been happening. And if what we need to do, we're now at a 1% annual rate of productivity growth. That's intolerably low. And unless and until we can turn it up, and the only way we can do that is by structuring our investment towards capital goods, and we're not doing that in an effective manner at the moment.
There are some who are very concerned about what's going on in the government right now because of what is called moral hazard. That in the effort to bail out companies, that we are bailing out some who have been profligate, not just those who have been prudent, including investing in things like high-yield bonds and things like that. Is this a time to be concerned about moral hazard, or should we put that to one side and deal with the much bigger hazard of the coronavirus?
I think it's to put it aside. It's not a. I mean, I agree it is an issue, but there are lots of issues which we can deal with without really being concerned about them.
And Dr. Greenspan, how do you assess the situation with unemployment? Obviously, we've lost 26 million jobs or so in 5 weeks. There are projections it will get worse. Some people say it may even get to an unemployment level that beats what was going on during the Great Depression. What do you project in terms of unemployment through the rest of the year?
Well, the problem basically is we actually are looking at a terrible first quarter, obviously. Second quarter is pretty awful. But if the issue of the virus works its way the way we expect, we probably have a very strong third quarter. But my concern is the fourth quarter and beyond. It's the years ahead where the changes have got to be made. And I would be less concerned about many of the issues which confront us today, although I do say, importantly, the virus issue has got to be resolved in a rational and sensible manner and change, for example, Social Security benefits and the way they are paid so that we don't run into the crisis that Sweden ran into as a consequence.
Briefly, in conclusion, what's the one thing that you would recommend if you were called up today by whoever's in charge and said, what should we do? What would you tell them?
First thing I wouldn't do is lift up the telephone.
You wouldn't pick up the telephone and take the call?
Let me put it this way. I do talk to my clients, and I do give them my views, but I try to keep my nose out of federal affairs.